திரு ஆனந்த் ஸ்ரீனிவாசன் அவர்களின் சாதாரண பங்கு அசாதாரண லாபம் தமிழ் வடிவம் இப்போது கிண்டிலில் கிடைக்கிறது. இந்த புத்தகம் புதிய முதலீட்டாளர்களுக்கு பங்குச்சந்தை பற்றிய ஒரு அறிமுகமாக இருக்கும். இந்த புத்தகத்தை நீங்கள் கிண்டிலில் வாங்க விரும்பினால் வீடியோவின் கீழே இருக்கும் லிங்கை கிளிக் செய்யுங்கள்.
Good evening. The new sovereign gold bond issued recently has been very successful. So far, in the latest issue, 5.31 tons of gold was sold as sovereign gold bonds. The price of 4,777 per gram. Sovereign gold bonds are basically the government borrowing in gold. So far, from 2016 to 2021, Government of India has sold 63.121 tons of gold. This is considered very high by experts. But India consumes nearly 1,000 tons of gold every year. True figures are very difficult to estimate because most of these golds are smuggled golds. Because gold through legal channel is highly taxed. Nobody wants to pay a tax of 15% on gold, especially those who are in serious investing. So what has happened is people who had invested in ETF are now subscribing to sovereign gold bonds. Sovereign gold bonds are not freely tradable bonds. If these bonds are freely tradable on the stock exchange, then these bonds would be attractive. In between, the Reserve Bank of India gives a window for existing investors to trade in their gold bonds. These are a few and far between. So, a retail investor who buys sovereign gold bonds is normally locked into for 5 to 7 years. At the end of that period, the investor can take his money either as gold coins or as paper money, whichever he chooses. Every year, there is an interest of 2.5% paid on the bond in terms of gold. Therefore, the investor gets the price of gold plus interest accrued either in grams of gold or in terms of cash. I do not know why the government is doing this. The idea is for the government to stop to tempt people away from buying gold. If that was the reason, then at an average 12 tons a year makes this a very bad decision because less than 1% of India's gold is going into sovereign gold bonds. What is more tragic is the rate at which the government is borrowing. Consider the first lot when government sold this bond when gold price was approximately 2,500. There has been a nearly 100% loss for the government if you measure it today over a period of 5 years. Plus there has been interest. This means Government of India is borrowing at the rate of 20%. Also, Government of India cannot inflate its way out of trouble. If there is huge inflation at this period of time, it will reflect on gold prices and gold prices will skyrocket. Since the scheme is measured in gold, people have the right to demand gold at the time when the scheme is closed and the proceeds are collected. This is a highly costly way to borrow money. From the sense of the government, it makes no sense to run such a scheme where interest is also paid in gold and at the renewal period is also given. At the period of time for renewal, if you don't want to renew, then you are also collecting money in gold or in currency. This product is suitable for those who can keep away money for 7 years. If you cannot keep away money for 7 years, then you should not be investing in this scheme. Especially the middle class, which is perpetually short of cash and also at times of trouble like what we have today, needs money in emergency. It makes no sense to park money in sovereign gold bonds and borrow on your credit card and take personal loans. Gold is a natural hedge against inflation. But more importantly, in India, gold is a place where you can raise instant cash by mortgaging it without any proof of income. In developed markets like America, there are other methods of raising cash like payday loans, and if you are in a salaried job, getting a personal advance from a local banker is easy. Therefore, the importance of gold is less. So, that is why Charlie Munger and Warren Buffett say don't invest in gold, because gold only bets that fiat currency will depreciate and therefore the value of gold will increase. And in places like America, since there is no cash flow coming out of it, gold is considered a wasteful investment. John Maynard Keynes this time said, this is why famously said, gold is a barbarous relic. But if you shift to countries like India and in Africa and Latin America, where fiat currency continuously erodes in value and nobody is sure of the regulatory outcomes, you are not sure where to invest in your money. Take the current example at this time, where interest rate available for a 1 year deposit is 4.9%. And if you take taxes into account, it comes less than 4.5%. When inflation is officially raging at 5%, and overall the W wholesale price index is raging at 10%. These drives savers to places where they can store in value, where assets can act as storehouse of value. Gold acts as a storehouse of value. If you can keep your money away from you for 7 years and you don't need to borrow and you have enough sources for emergency money, then you can definitely subscribe to a sovereign gold bond. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.